Well, let's talk business this morning. Nigerian equities markets closed on Friday after halted the short but vigorous slide recorded in the preceding trading session, pushing the main equity index up 0.7%. Year-to-date, yield remains in the red, though singularly because of the big blow to equities on Thursday after some profit taken that took the shine off the three daily gains reported earlier in the week. Reasonably driven by increased activity, the rebound followed by 41% improvement in transaction volume. The all-share index was up by 353.8 basis points to 51,222.3. Similarly, market capitalization advanced to 27.9 trillion naira. The index is down by 0.1% since the year started. Well, joining me on News Central this morning is Azeez Lawal, Managing Director, TrustBanc Assets Management Limited. Good to see you this Monday morning, Azeez.
Yeah, good morning. Thank you for having me.
All right. The NGX, the first trading week of the year on a bullish note with an appreciation of 0.7% is definitely what we are looking to see and what we've seen. But what accounted for this good outing after the profit actually took a dip on Thursday?
Yeah, thank you. Yeah, what we saw last week was an extension of what we've seen in the last 13 working days before then, which is a bullish run that since 2022. Like you noted, for Thursday, that was just a temporary setback, particularly driven by Airtel, like you mentioned. Even though on that day, the sentiment of investors was still positive, meaning generally there were more gainers than losers. It was just one temporary setback from a large cap stock. That was why the market came back to gain on Friday, and we expect that bullish run to continue into this week. For investors, really, this is the time to come into the equity market, at least before February. Thank you.
At least before February, you said. But the Nigerian government is actually seeking a parliamentary approval for securitizing its ways and means loan from the Central Bank of Nigeria. Now, what is the impact of this move on the capital market?
Yeah, thank you. Yeah, that question. Yeah, for the capital market, before that, right? So there's also the moral part of it, right? For morality generally. So for transparency, it's very good for the country because we are talking about 22 trillion worth of debt that has been shrouded in secrecy for years now. So the fact that the government is coming to securitize it now makes it clear that yes, there is a debt somewhere that the public should know about now. Talking about public knowing about it, now coming into the capital market, securitization basically will provide debt for the capital markets. Even though the public does not like debt, the market likes debt because it provides an avenue for people to invest. So for those that want to invest in such securities, since that debt has been securitized now, they can invest at rates. And if you want to exit, which is also one of the advantages of securitization, it gives an advantage to those that may want to exit at some point. So because it's not in a recognizable market where you can buy and sell, there's an opportunity to go in to earn and exit to get liquidity whenever you need your money. So it's good for the public for transparency's sake, and it's also good for the market for debt's sake.
Well, what are your expectations from the fixed income market this week?
Yeah, for the fixed income market, generally for markets since the turn of the year, have been positive. We still saw that last week in terms of buy side activities. We saw serious buying side activities across the fixed income market, except for automobiles market that was quiet. We expect that to continue this week, largely driven by liquidity in the system. We expect that to continue this week as well.
All right. Thank you so much, Azeez Lawal, for talking to us, MD TrustBanc Asset Management. Thank you.
Thank you so much for having me.